Greetings, fellow real estate enthusiasts. You've probably heard the phrase, "What goes up must come down." Well, that's certainly true in the world of real estate. So, whether you're a homeowner or an investor, it's essential to prepare for a potential crash in the market. But don't worry, we'll guide you through this with our wit and wisdom. Let's get started. Section 1. Do your research before you start hoarding canned food and building a bunker. Let's take a step back and do some research. Look at local and national trends and analyze data to determine the market stability. You can start by checking the real estate market's historical trends, checking the inventory levels, and researching the job market in the area. You can also follow national news regarding the real estate market, such as mortgage rates, new construction projects, and housing prices. By doing your research, you can gain a better understanding of the market's current state, which can help you make informed decisions regarding your investments. And if you're really feeling saucy, throw in some tea leaves and a crystal ball for good measure. Section 2. Assess your risk tolerance. Now that you have a better understanding of the market, it's time to assess your own situation. Risk tolerance is the amount of risk you're comfortable taking when investing in the real estate market. Understanding your risk tolerance is essential before investing in any market, especially in a volatile one like real estate. You can assess your risk tolerance by considering your investment goals, financial situation, and personality. Ask yourself, what is your investment goal, and how much risk can you tolerate? Are you the kind of person who would bet their life savings on a coin flip, or do you prefer to play it safe? If you're looking for long-term investment opportunities and have a stable financial situation, you may be more comfortable taking a higher risk. However, if you're nearing retirement and need more stability in your investments, you may prefer to invest in less risky assets. Whatever your risk tolerance may be, make sure you're comfortable with your investment strategy before the bubble bursts. Section 3. Protect your assets. In the words of the great philosopher Rihanna, better have my money. Protecting your assets is crucial in the event of a real estate crash. Make sure you have the right insurance coverage, such as liability insurance, homeowners insurance, and title insurance. Liability insurance protects you if someone gets injured on your property, while homeowners insurance protects your home and its contents from damages. Title insurance is essential when buying a property, as it ensures that there are no legal issues with the property's ownership. You can also protect your assets by setting up a trust or LLC to hold your properties, which can provide additional legal and financial protection. For those of you who like to live dangerously, don't forget to knock on wood and avoid black cats. Section 4. Diversify your portfolio. Don't put all your eggs in one real estate basket. Diversifying your portfolio can help protect you from the risks of a real estate crash. Diversify your portfolio by investing in other asset classes such as stocks, bonds, and commodities. You can also consider investing in different types of properties such as residential, commercial, and industrial. By diversifying your portfolio, you're less likely to experience significant losses in the event of a real estate crash. And if you're feeling extra adventurous, try investing in unicorns and rainbows. Section 5. Reduce your debt. Reducing your debt is essential in preparing for a real estate crash. We know you're proud of that shiny new Ferrari in your driveway, but high levels of debt can leave you vulnerable in a real estate crash. It's essential to reduce your debt as much as possible, so you're not overextended if the market turns. You can do this by paying down your mortgage, refinancing to a lower interest rate, or selling off other assets to reduce your debt load. By reducing your debt, you'll have more financial flexibility if the market turns, and you won't be overextended. It's important to note that paying off your mortgage early may not always be the best financial decision, as it depends on your financial situation and investment goals. But if all else fails, you can always try bribing your creditors with cookies. We don't guarantee it'll work. Section 6. Prepare for a sale. If you need to sell your property quickly, there are a few steps you can take to prepare. First, make any necessary repairs and improvements to increase the property's value. This may include painting, landscaping, or updating appliances. Second, stage the property to make it more attractive to potential buyers. Finally, consider pricing the property below market value to generate interest and get it sold quickly. By preparing for a sale, you can increase your chances of selling your property quickly and minimizing your losses in the event of a real estate crash. And if that fails, just throw in a free puppy. Everyone loves puppies. Section 7. Seek professional advice. Last but not least, it's essential to seek professional advice when preparing for a real estate crash. It's important to note that seeking professional advice does come with a cost, but it's a small price to pay compared to the potential losses you could incur in the event of a real estate crash. By seeking professional advice, you can ensure that you're making informed decisions and taking the necessary steps to protect your investments. Speak with a real estate agent, financial advisor, or attorney to get the insight and guidance you need. Financial advisors can help you make informed decisions regarding your investments and diversification strategies. Attorneys can assist you in setting up trusts or LLCs and provide legal advice on any potential liabilities. And if they don't seem to know what they're talking about, just pretend to understand and nod your head politely. You can always Google it later. In summary, preparing for a real estate crash can be daunting, but with a bit of research, risk assessment, asset protection, portfolio diversification, debt reduction, property sale preparation, and professional advice, you can increase your chances of surviving the market downturn with your wit and wisdom intact. Remember, a real estate crash is not the end of the world. It's an opportunity to learn and grow as an investor. So, stay positive, stay informed, and stay prepared. And if all else fails, you can always start your own real estate-themed sitcom called Crash and Burn and make millions. Thank you for tuning into our guide to preparing for a real estate crash. We hope you found it helpful, informative, and at least a little bit witty. Happy investing!